So autonomous and full self-driving, there was a time that people started to not believe because they've been waiting so long. Now they should believe?
Absolutely. And it's like a lot of things we've seen before, like smartphones. People said, oh my God, these things weigh 3 pounds, they cost a couple grand. Who's going to use a smartphone or a cell phone? All of a sudden, 2008 happens, Apple comes out, the whole world changes like that. So a lot of times these things take a while to get there and people start to dismiss them. It's the right price point, the right capability, it takes off. I think we're 1 or 2 years out from that happening in self-driving. Get ready, the future's almost here.
The headwinds between the pay package vote, that's June 13th. On that one, the politicized, way that people treat Elon Musk. But this is a cyclical downturn in EVs at this point. I mean, the OEMs, as Kevin mentioned, the legacy car makers are actually pulling production.
Yeah, they're backing off.
Because nobody wants to buy an EV at this point. It seems like everybody that wanted one has one now. Once we get through that, Megan, you've got the Robotaxi event coming up in August. Are there catalysts out there? And you guys said you're positive long term. That, hey, you just got to kind of wait and see at this point because it may get better.
Yeah, we think that Tesla is one of the main drivers of the adoption of autonomous vehicles. And I think that the potential applications there and the potential market for Teslas, especially as it refines that technology, as it improves its own full self-driving technology, and as robotaxis become more just socially acceptable and normal to see in real life, this is a massive adoption spark for Tesla. And we think that this is, so far, whenever we look at the capable companies that are operating in this space, Tesla is a clear leader here.
If you're a Tesla stock investor, then you're probably both excited and nervous about Tesla's upcoming Robotaxi event in August, and we don't blame you for that, as we've heard from many analysts who think that the event will be a make or break moment for the company. And according to Morgan Stanley's Adam Jonas, the approaching 2024 Annual Stockholders Meeting is another make or break moment for Tesla. However, the analyst recently announced incredible news for all Tesla shareholders regarding the meeting, which led him to reiterate his overweight rating and $310 per share price target on Tesla stock. So let's get into the news, talk about why Morgan Stanley is still so bullish on the stock, and whether you should follow suit and go all in on Tesla as well. But first, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
But that's the nature of what Apple
Tesla. Yeah, the stock is at 190 today for Apple. What's your target on Apple?
250. I base 275 is the core base target that we just raised it to. 250 is what I kind of view as almost a worst case base scenario. 275 base case.
And then you have a bull case, like within the next year?
300. Look, I think, Nicole, a year from now, the conversation that me and you're going to be having is, who hits 4 trillion first? The godfather of AI, Jensen, NVIDIA, Apple, or Nadella and Microsoft? That will be the conversation a year from now.
All right, so that'll be the race. Apple, NVIDIA, and Microsoft for the 4 trillion.
The race to 4 trillion.
Last but not least, yep, I got it. What about Elon Musk and Tesla? This was a name you loved. You loved his vision. You wanted him to be the adult in the room. You felt like he did that in the last call, missed it on the prior call, but grew up in one quarter. Now what? What's your target on Tesla these days? How much do you like it or not so much?
Yeah, look, I think an overhang gets removed when the comp package gets approved at the shareholder meeting. And I think then you now start to see demand tick back up in China as we go in the second half of the year. Numbers are lowered, and then I think the FSD autonomous vision starts to take hold. And that's why when I look at Tesla, I ultimately think this is one. We're going to be talking $275, $300 for Tesla, as we play out over the next 12 to 18 months.
As many investors already know, Elon Musk's 2018 CEO Performance Award was rescinded by a Delaware judge earlier this year, which resulted in Tesla asking its shareholders to ratify the 2018 compensation plan at the 2024 Annual Stockholders Meeting. The company has been putting in a lot of effort to encourage shareholders to vote for the ratification of the pay plan, as well as moving the company to Texas. In a previous note, the Morgan Stanley analyst, for his part, said that Elon likely needs Tesla now more than ever amidst the emerging AI industry. He also noted that Tesla stock would likely see some volatility due to the shareholder vote. Now, in his most recent note, Jonas said that analysts at Morgan Stanley have encouraged investors to pay close attention to the June 13th shareholder vote due to its significance to the long-term strategic direction of the company. He also said that the broader collection of Elon Musk's businesses may collectively invest many tens of billions of dollars in AI infrastructure in coming years, and cost of capital is deterministic for AI supremacy. This brings us to today's news from Morgan Stanley, and if you're bullish on Tesla, you don't want to miss out on what Adam Jonas had to say. So let's get right into it. Hello everyone, and welcome back to Investocracy. The analyst noted that based on an investor survey that Morgan Stanley conducted, it appears that Tesla shareholders will vote in favor of the compensation plan. He said that the majority of the respondents, around 57%, expect Elon's compensation package to be approved, outnumbering respondents who do not expect approval by more than 2 to 1. Additionally, the analyst said that if Elon's pay package is approved, 68% of the survey's respondents expect Tesla's stock price to react positively over the next 3 trading days, with 24% expecting shares to go up from 6% to 10%, while 44% expect them to jump 3% to 5%. Notably, these respondents outnumber those who expect the stock to be down upon approval by almost 6x. Meanwhile, 20% expect a neutral stock price reaction, which is plus or minus 2%, over the subsequent 3 trading days, whereas if the comp package is not approved, only 7% expect a neutral stock price reaction. In the event that the package is not approved, the vast majority of respondents, a staggering 81%, expect the stock price to be down, and 54% expect the stock to be down significantly, so by 6% to 10% or even more. Therefore, it's very important for shareholders to approve the pay package, as the approval could send the stock as much as 10% higher, according to Morgan Stanley. Additionally, Elon confirmed on X that if the package is approved, he'd only be allowed to sell enough stock to pay taxes, and the remaining stock must be held for 5 years, making it impossible for him to leave the company anytime soon. That way, Elon will confidently approve more AI developments at Tesla, and the company will be able to fully capitalize on AI opportunities under his leadership. And the markets for Tesla's AI opportunities are massive and will definitely bring hefty returns for investors. For instance, the global autonomous vehicles market is expected to grow to $1.17 trillion by 2032, while the global humanoid robots market will hit $28.6 billion by the same year. Given that Tesla is the global leader of EVs that managed to disrupt the entire automotive industry, we wouldn't be surprised if it manages to acquire a big share of these markets too, or even completely disrupt them. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You know, Megan, the bumpy news for Tesla right now and their stock activity is they're going through kind of a very quiet restructuring, right? Where they're trying to quickly get out these lower priced cars. But the landscape, if you look forward for them, it's pretty positive, right? You've got protection against low priced Chinese cars. You've got the local EV competition like Rivian and Lucid and Fisker and Polestar. They've got weak balance sheets. They may not make it. You've got very little competition from American automakers, the legacy makers who aren't really competing with Elon Musk. So once they get through this chasm of changing their company into these low price models, what's in their way, Megan?
You're exactly right. I was just talking to Andy about this earlier today, and we were like, man, if Tesla can make it through this year, the tailwinds are certainly there. Just from an overall perspective, we see consumer interest in EVs growing. We do think that this is an area that more and more consumers are going to be open to and explore adopting. And I think that another thing Tesla has going for it is it's kind of positioned itself almost as a luxury vehicle. When you think of a Tesla, yes, it's an EV, but you also know that you're getting really high quality alongside it. So that's a nice component of its branding, and the availability and the accessibility for more consumers to be able to buy in at a Tesla at a lower price point and receive this perceived luxury vehicle. I think that that's another tailwind, and that's another thing that's driving that overall consumer happiness levels for Tesla higher. So for us, this is a name that we do really like long term, and we do see significant tailwinds, and we do believe in the long-term consumer adoption of electric vehicles. Now it's just kind of a matter of time and kind of making it over these near-term hurdles that Tesla is facing this year.
Whether you love or hate the CEO, Tesla is a force to be reckoned with. The company is all about the latest advancements in the EV space, and this is causing many big names on Wall Street to remain bullish on the stock despite the recent headwinds. Aside from Morgan Stanley, famed venture capital investor Brad Kostner increased his Altimeter Capital Management stake in Tesla by a staggering 276% in the first quarter, bringing its holdings to 589,700 shares. And in May, during an interview on CNBC, Kostner stated that Tesla has achieved a ChatGPT moment. Those are strong words, and he might just be 100% correct in his assessment. Tesla is way more than a car company, even though its EVs are the biggest revenue and profit driver of the company. In fact, Elon himself sees the company as an AI or robotics company. This is thanks to the company's impressive autonomous driving technologies and humanoid robots, and as Elon and his team work relentlessly to build Tesla into the largest EV business in the world, the entrepreneur believes that humanoid robotics will play an integral role in the company's next chapter. Through the power of generative AI, Tesla's Optimus can become smarter over time and, in turn, learn to complete more sophisticated tasks. For Tesla, in particular, there are two primary ways to benefit from Optimus. First, the exponential labor and productivity gains that can be achieved from humanoid bots could be massive. The idea is that Optimus will speed up the production of EVs, therefore accelerating Tesla's car sales. The more lucrative opportunity with Optimus is that Tesla could sell these robots to other businesses that are heavily reliant on human labor. So these are two new revenue streams for Tesla using Optimus, and if we put the humanoid robots aside for a moment and move on to autonomous driving, we'd see that Tesla has a number of interesting projects in the works. Similar to Optimus, autonomous driving carries some potentially lucrative tailwinds for Tesla. As it is a software product, self-driving technology will carry higher margins compared to Tesla's EVs. Moreover, the autonomous driving feature is a subscription service, making it a recurring source of revenue. If everything works out, this one-two punch should help accelerate Tesla's top line while simultaneously generating meaningful margin expansion. As a result, Tesla is looking at a massive opportunity to bolster its cash flow, which the company could use to reinvest in the business. This leads us to the big question: is Tesla stock a buy now? So far, in 2024, Tesla shares are down around 28%. This is because many investors sold earlier in the year after the company's 2023 Q4 earnings report, which many investors didn't like, as Elon said that he expects 2024 to be a bad year for Tesla. While shares rebounded a bit after the company demonstrated some improvements during its Q1 earnings report, many investors still seem to view the stock as risky. During Kostner's recent interview on CNBC, he said that he sees Tesla's advancements in AI as deeply underappreciated, and this might just be a perfect summation of what's going on. Therefore, an investment in Tesla should not be rooted in a bullish outlook on EVs and green energy alone, and investors who are considering buying more shares should be aligned with Elon's vision as it pertains to robotics, autonomous driving, and AI. Given how much the stock price has dropped, we think that buying shares right now is a good idea. But investors will need to exercise patience and a long-term time horizon. Nevertheless, buying shares and holding them for the long run could prove to be a lucrative decision if you're a growth investor. But what do you think about Tesla stock? Is it a buy at its current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.